Since we talked about China, why don't we start with that? I mean, any opportunities? This really badly beaten universe of Chinese equities.
Well, I mean, if you look at the Chinese economy, there are some positives relative to other major economies. So broad money growth is actually growing at a reasonable pace. So what that tells you is that monetary policy settings, financial conditions are relatively loose. The problem is that there's a lack of a transmission mechanism between broad money and narrow money growth. So consumer sentiment, household sentiment, it's very subdued because of zero COVID policy. And so if you see any shift in terms of the willingness of the Chinese government to start trialling a more looser, a healthcare policy, that may actually trigger some improved sentiment. In addition, in the short term, you're likely to see government agencies try to support stock markets. And whilst that may not necessarily lead to sustainable stabilization, it could create, let's say, a short covering rally in the short term.
Why do you think there's such a big disparity, it seems, on sentiment offshore and onshore? Even just with onshore, we've seen southbound flows continuing to this day. I'm just wondering, why the disconnect, do you think?
Well, I mean, one simple reason is that global investors that allocate to the Hong Kong stock market have a multitude of choices, whereas onshore investors have relatively tight restrictions in terms of where they can invest. And so there are fewer alternatives to either mainland investment opportunities or Hong Kong or technically offshore investment opportunities.
Yeah.
Right. Now, how would you, I mean, we can look at technicals, you can look at valuations. Anything that you can measure almost tells you this is a buy right now. How would you approach just do I allocate towards Greater China or do I not? At this point?
Yes, I mean, the way that we would think about it is that you need a valuation opportunity, but you also need a catalyst, a stabilization of earnings momentum. And the problem is that the earnings downgrade cycle continues apace across most sectors. And that's a function of the export situation being quite difficult. It's a situation of regulatory policy being quite restrictive. And so what you're looking for is a stabilization in earnings momentum in the key sectors, whether it's technology or financials, before investors then get excited by the valuations as well.